Indian Bank is in focus. That stock too is down about 2.5% in trade. Came out with a resilient set of numbers. Let's find out the outlook on asset quality as well as the credit growth with Shanti Lal Jain, the MD and CEO of Indian Bank. Thank you so much for taking time out. Let's discuss the quarter gone by because the bank has seen the profits up by about 34%. The NII growth has been a little bit flat year on year. What have been the key growth drivers?
So you see, in the last quarter, our operating profit has grown by 16% and our net profit has grown by 34%. So operating profit of the bank has grown on growth of NII. So of course, on a YOY basis, it is 2%, but sequentially, our NII has grown by 8%. This non-interest income has also been grown by 36%. Our non-interest income has grown on the strength of growth of our fee-based income, on the strength of growth of our forex income, on the strength of growth of our recovery in return of accounts, on the strength of growth of our PSLC income. So in all kind of income is growing, and as a result, our operating profit has grown by 16% and our net profit has grown by 34%. In the deposit side, we have grown by 8%, but the deposit of 8% is grown on the strength of 10% growth in CASA. And as a result, our cost of deposit has come down, whereas our yield on investments and yield on advance has gone up, resulting in improvement in margins. Our margin has improved from 2.89 to 3.03%. So there's a growth in margin, there's a growth in NII, growth in other income.
Yeah, the other income was strong in Q2, which you just mentioned, but has fallen around 25% quarter on quarter. Where do you see it basing out as being a normalized one?
So you see Q2 versus Q3. Q2, there are a major recovery of a DHFL of 610 crore. That is a one-time recovery. If you exclude that, our recovery in bad debt is better and our other income is better. So we hope that we'll continue to maintain this kind of trend because the growth is based on the fee income, based on the growth of forex income, based on the growth of PSLC income, and based on the growth of recovery in write-off account. So all these four will continue.
Remain elevated. Talk to us about the asset quality. Where is the stress, and how would you provide for it going ahead?
So you see, our gross NPA number has come down from 9.56 to 9.13, and likewise our net NPA has come down from 3.27 to 2.72. And our provision coverage ratio increased from 83 to 85.49%. And you see the provision part, that's basically there are one big provision, so one NBFC account where we have fully provided. And therefore there is an elevated number. Second, additional provision is some of the provision have shifted from standard asset provision to NPA provision because two accounts of around a 385 crore where because of the court order was shown under standard asset, but the provision was in standard book. So this provision has moved from standard to NPA provision, and therefore increased provision is appearing in the balance sheet.
Good morning, Mr. Jain. Now your capital adequacy ratio is at 15.5%. How should the investor community, your shareholders, the viewers of ET now look at that time for growth, or are you going to be cautious?
No, the minimum capital adequacy ratio is 11.5. We are at 15.47. And here the profit of the current 9 months is not included. If you include a profit of current 9 months, close to 3,000 crores, our capital adequacy will increase by 100 bips more. So as against 15.47 will be 16.45. So we are adequately capitalized. We are and therefore we are poised for growth, and the capital is available for growth. Liquidity side also we are adequately liquid. Our LCR is around 180%. So from capital and liquidity, both point of view, bank is ready for growth.
Now, Mr. Jain, the retail book is of course looking good, but the corporate book that has seen a degrowth as well. Is that going to be a focus area going forward, especially given all of this talk that we have on smart spending by the government, the infrastructure boost?
You see our RAM is growing 11%. Our retail is growing 13%. Our agriculture is growing 14%. Our MSME growing 6%. So the RAM portfolio, which is 61%, is growing 11%. Corporate, of course, the growth is muted, but you see on a quarter-on-quarter, we have grown by 3,000 crores. So now the growth has started coming in corporate as well. So going forward, looking to this growth in RAM and growth in corporate, we are poised for growth.
Okay, and finally, when do you see the capex cycle picking up?
In major projects for coming to us for the road project, HAM project. So road there is a good growth. And some projects are coming for textile also because the margin in textile is good nowadays. So proposal for increased capex in textile is coming in. Proposal for steel is also coming for capex. Proposal for food processing is also seen. So and some proposal for petrochemical and gas. City gas project, they're also are seeing. So there are some proposals we are getting for all these sectors besides this working capital. And in the last quarter we have sanctioned around 22,000 crore of new loans.
Thank you so much for joining us and giving us a view as to what the outlook is on your asset quality as well as your home loan book and how you're seeing your credit growth shaping up. That's the management of Indian Bank.